Hey, okay, welcome back to video 2 of our review of Vanguard's LifeStrategy Moderate Growth Fund. This, of course, is the Precision Data Analytics channel. And before we get started, of course, again, I want to remind you to do me a big favor this evening. Click on that like button for me. And if you haven't subscribed, by all means, click on the subscribe button. And, of course, maybe even, if you like the content, share the video, share the channel with one of your friends this week. Okay, so let's begin by looking at the naive forecast. Naive is sort of a benchmark. You kind of compare more advanced models against it, but our models are all pretty basic, this ETS and the REMA and profit. But anyway, you can see, again, we're using a predictive interval. It means there's an X% chance that the actual closing price will fall within the shaded areas. The darker shaded area is a 75% chance. So right now our forecast is looking pretty good. It is staying within this forecasted level here, okay? What about the ETS model is a little more advanced, and you can see it's pretty much telling the same story as the naive. If you look back up here, the naive goes from only barely touches 36 down to here, but over here you can see this actually crosses 36 and touches the 32 line. So this cone's a little wider, but again you can still see. So I'd say this model is looking pretty good because now we're still within the 75% predictive interval rate. What about the basic REMA? Okay, now REMA is the cone's a little narrow, but it's also I'm going to give you a technical term here. These are called wiggly lines. It's a very important concept in forecasting. And again, the same story. We're kind of, we're really still within the 75%. Kind of just tight roping along the 75% here. That's our REMA model. We got an adjusted remodel. An adjusted remodel makes absolutely no sense. Okay, so let's look at profit. Okay, profit is saying the price is going to continue along with some crazy volatility. Now let's begin to look at our weekly returns, and monthly returns, and our annual returns. The good news here is you can see since the first of the year we have more positive weekly returns than negative returns. Okay, what about monthly and yearly? Again, more positive monthly returns than negative returns. Also, the second part of the year has been very good as far as annual log returns. What about the cumulative returns? So this basically means if you'd invested $1 back here in 2023, that dollar would now be worth $1.40. There you have it, forecast and returns for a fund.